benefit from that, especially in this very challenging situation. Okay, sorry. Am I clear now? Okay. When we are talking about LNG Indonesia is part of the world LNG. So, of course, when I talk about LNG Indonesia, as most of our LNG does not consume domestically, so I need to review what exactly happened with respect to the world LNG. So this will be my presentation, the content, especially because this is a very high level, because it's something like Keynote. So we'll check a little bit about global LNG trend and market, and then we'll go to see how the Indonesia LNG portrait and also the prospect that we have, and then what kind of activities of exploration and exploitation, sorry about this, it's with formation that we have, and the major ongoing projects currently to support this one. And then we will check a little bit about oil and gas domestic demand, and then more specifically on gas and LNG utilization and challenge that we have ahead, and then I will conclude. Dear fellows, when we see about global supply and demand LNG, we can see, and it's very clear, and I quote this from IEA in August 2020, where it shows, this graph shows really that LNG global expected to rise, while an Asia-Pacific region imports to increase. And when you see here, so this is Africa, Asia-Pacific, you see the color here, Central, South Eurasia, Europe, and then see here, Russia, Mozambique, Nigeria to increase their capacity. And then it has to be watched seriously actually by the traditional market exporter. We will expect in front of us there will be a very tough commercial deal competition. Now, how about the situation now that I think everybody of us, since we are player of LNG here, understands that we will see the new shape of commoditizing LNG will be pushed by the imbalances of supply and demand. What I mean by this is that the LNG producers cannot any longer enjoy the benefit where they can secure the market, a huge market ahead, even before they start to production or to the project itself, even before the FID or sanction of the project. Can we see here? Major new liquefaction projects will increase the amount of flexible supply in the major portfolio, and we will expect the major to target uncontracted LNG, especially in the Pacific area. So if you see here, and then what does it mean? It means, if you see here in the left-hand side, flexible LNG, there's huge here, where it is very flexible in many terms. Destination, volume, term and conditions, price, link, and everything else. And then, in the contracted and contracted LNG demand in Asia will expand quickly. This will be the target market for the seller with the flexible volumes. What is the message of this? It means only if you are strong enough, you can survive. Now, this is also the specific situation that we have now, especially because we are now in COVID, what you call COVID-19 pandemic, where everything is scrutinized in terms of supply, demand, transportation, and anything else. So we are in a situation where lower in demand forecast, but if you compare to that of supply, it will bring more pressure to LNG market. You can check here in supply forecast, in 3 years' time, here, 2019, 20, and 21, the total supply will decrease only 4.6, but demand forecast will decrease by 5.5. It means what? It means we have a gap where demand lower than that of the supply. So this is the challenge that we will have in future. So what is the consequences? The consequences will be like this. We will not enjoy any longer, as I mentioned previous before, the era for LNG as a long-term established contract will shift to flexible terms. Now, this is the portrait of our leader. We got this from both McKinsey. It shows here, in the past, even though still indexed to the oil, but you can check here, in 2011, it sits in 14%, but now it steadily decreased up to 10.1. And what flexibility they expect? Flexible destination of volume, market-based pricing, there will be a very loose price review, and then supplier reliability, flexible payment, rich gas quality specification, investment partnership, and there will be also emission intensity transparency. That's due to the, now that we have what they got energy transition to a cleaner one. So everybody stakeholders, we need to know this one. Indonesia cannot avoid such situation, and even all the players that we have. Now, let's see what happened with our LNG. This is our LNG Indonesian balance currently. You can check here from 2021 up to 2035, in 25 years time. So we will see how much that we have uncommitted cargo. We still have many, and we have also some that go to domestics, but for the LNG export will go, but some of them will be replaced maybe by somewhere else. So what does it mean? More customers, new market, and flexibility is really required in order to absorb and commit it to the cargoes that we will have. I believe this will be discussed later on in the second session. Now, the message that we have now, so we need to create and expand our new domestic market. We will not surrender. We are very, very optimistic. We have to have new innovation. So this is the thing that we need to do. We still have here, in the very left-hand side, we have gas and LNG infrastructure over here. And then also, we have all facilities with respect to LNG receiving terminal, the existing pipeline, the plant pipeline, LNG plant, and the plant receiving terminal. In order to optimize new market, we need a cleaner energy. So what we do, we are now in the process of replacing some of diesel to gas for power generation in remote off-grid islands. So it will absorb some of the LNG, will be gasified for domestic. And then we will also have LNG for transportation, for vessels, for trains. And LNG also will go for non-traditional one. It will go for non-connected gas transportation pipeline. We will have new commercial enclave residential city. We will try to put LNG there, gas there, to power there. And then it also will create what you call as an opportunity for LNG bunkering and small transportation vessels. So this is an opportunity along the value chains. Now, and then the opportunity to expand the market in Indonesia, I believe, still remains large. So if we see here, the GKM, which is the spot, and see here, I got this one from the Oxford Institute Energy Study, July 2020, where we have the gap here. And now that's what we call, it is about time to explore domestic small, yet many customer base. We have to move to non-traditional consumers. The area of biggest demand upside by sector, if you see here, more will go to the power generation, some to the industry, transportation, residential, commercial, and bunkering. This is based on survey making by McKinsey in 2020, and we also follows and pay attention to this kind of thing so that we can optimize and so that we can do what necessary to do in order to optimize the LNG market that we have. As there are many uncontracted cargoes as in the previous slides. If you see the LNG value chain infrastructure, really holds central role to expand optimization. We are lucky, we have a very wide valley of islands. So it will give us opportunity, but it also comes with challenge. Where we see here what we'll be doing with the upstream pipeline, transmission, we need regasification, plant placement, and also connectivity within, and also inter small islands. So all those things, this is the optimism that we need to build, that we are optimistic, yet have to work hard in order to make our LNG will be absorbed by the market. Now, this is the way to support. We have so many projects in oil and gas, and it spread it along with the Indonesia, in Java, up to the eastern here, in the mid and in the eastern, and with a huge capital investment expected. And some will already be expected, maybe a little bit off schedule, but we expect will be only slightly a little bit or not there, but we will try to make it on schedule, on target. And optimism has to be maintained. Indonesia, we do have a long-term plan. We start from what we will do with respect to all this thing. We need to maintain our existing production. We need to transport reserve to production. We need also in terms of enhanced oil recovery, and we increase more to exploration as we have now some fund available for that. So those are the things to support the optimism and the challenge that we will have in the future. To conclude, I'd like to say here, ladies and gentlemen, dear fellows, now the global economy growth is hard influenced down by the COVID-19. The energy supply, demand, investment tries to find where we'll go with the new equilibrium. The second thing, the LNG market is currently under hard pressure, adjusting to flexible commercial terms and find new small, yet many markets. This is the opportunity that we expect. Indonesia remains positive and optimistic, adjusting to this new reality that we face. And LNG infrastructures to expand and increase more domestic utilization, really it holds a central keys to make those optimism works. Ladies and gentlemen, this is the presentation or a keynote, if I may say so, that I need to deliver in this very respected forum for our further discussion, including to the next. Thank you very much. I return to you.
Thank you very much, Kevin, and hello, everybody. And I'm delighted that you asked me to moderate this panel. I think we've got about 40 minutes. There's a lot of ground to cover. I did enjoy Sampe's presentation. I thought it summed up the situation very well, looking at the challenges around supply and, of course, on demand. And we're going to cover some of those discussions today. We're going to focus on LNG, but LNG all the way to power. We're going to talk about how you build commercial projects, how you finance them, and we're also going to touch on some of the impacts that have been happening around COVID, amongst some of the other risks that you get when you're putting a project together. And of course, you know, this has been a year where there has been a lot of focus in 2019 in terms of decarbonising the energy sector. Gas has got a key role to play as we approach net zero by 2050, which is a kind of a long way off, 30 years, but also not a long way off, depending on how you look at things in terms of the scale of these projects from start to finish. So I'm going to give a preamble, but I think, first of all, it would be good just to let the other panelists introduce themselves so that everybody's aware of who they are. And I'd encourage people who are watching this to post questions as well as we go, and I'll try and pick these up. So looking at the screen, I see Johan first, then Dorian, and then Daniel, three very esteemed panelists and got a very strong reputation in the financing of the energy space, and particularly in LNG and power projects. So perhaps Johan, you could go first, and then Dorian, followed by Daniel, in terms of just a brief introduction to yourself and where you see some of the key themes emerging from what I've done right now. And then we're getting to the panel discussion. I'll ask you some questions.
Sure. Thanks for that, Tim. Can I just check you can hear me okay?
Yep.
Yep, sounds good. So, yes, as Kevin was mentioning, my name is Johan. I've been at SMBC covering the energy and natural resources space for about 3 years. And prior to that, I've been sort of a natural resources, project finance, acquisition finance banker for about 15 years, both across Australia and Asia. I think SMBC in energy and natural resources, we kind of run an integrated practice. So that means for oil and gas, we cover the entire value chain, whether it's RBL, upstream financing, or whether it's terminals or FPSOs, the entire LNG value chain and petrochemicals. I think looking at some of the themes that we're covering in today's presentation, obviously the elephant in the room is the current sort of subdued LNG environment, low spot prices, oversupply. How do we kind of make projects bankable in this sort of environment? What are some of the key elements that lenders will look at? What are the projects that are likely to go ahead and not? So I guess those are some of the themes that we'll cover off during the course of this panel. But I might just pause and pass it to Dorian.
Yeah, thanks. Over to you, Dorian. Yeah, and try and leave something for Daniel to say as well.
All right, thank you very much. Well, I'm very pleased to be part of this panel. Daniel, I started at SocGen when I was a young intern, and Johan would know I worked for SMBC as well in the past. I'm global head of oil and gas for DBS since 18 months or so. The bank is quite active in the oil and gas space, and we have also started to be way more active, I would say, on the gas and LNG space since over the last 2 to 3 years, even before my own arrival. Because we believe in this form of energy, especially in Asia. And we try as well to follow what's happening in the market, and everything has changed over the past 2-3 years, and even more recently. We believe DBS that the fundamentals not necessarily change from a long-term perspective, but I'm very pleased to discuss here with Daniel and Johan this particular subsector. On my background, I did a bit of power when I was a bit younger. Quite a lot on the upstream, I would say, and then more generally the entire value change over the past years.
Excellent, plenty of experience. Thank you. And Daniel, over to you.
Thank you, and good to be with you this afternoon. I'm Daniel Mallo. I run the natural resources, energy, infrastructure, and mining practice for Societe Generale here in Asia Pacific. LNG is a big part of what we do globally, but also in Indonesia. Our recent work around the LNG space in Indonesia has been both on the liquefaction side and on the LNG to power side. So we were financial advisor on Tangguh Train 3 a few years ago, the expansion. And more recently, we were lead arranger on the Java 1 project, LNG to power project, which in my mind will be a bit of a blueprint for what might happen more broadly in the region. So I'm looking forward to the discussion. I think to me the key themes around this sector will be A, the fundamentals, B, demand recovery, C, infrastructure, and D, the planning cycle for those kind of assets. I think those are, to me, the key themes. If we look at, where consultants look at addition of regasification capacity, I was on a panel at Gastech yesterday. 2/3 of global additions in regas capacity are expected to be in Asia over the next decade. So the bulk of the investment in regas is likely to be in this part of the world, and it will be fueled by the power market. But I'm looking forward to the discussion.
Thank you, Daniel. And it is a busy week, of course, with Gastech going on as well, and some of the conversations that are happening. That's also a virtual conference, of course. So I think you've raised a number of very interesting issues there. I mean, developing a commercially viable LNG project all the way through to power, does take time, and there are kind of many considerations, of course. And in the context that you said, Indonesia is a country where electricity demand is going to triple between 2010 and 2030. So huge demand, not just in terms of access, but in terms of getting energy to middle classes who do the types of things that we're doing here, and massive middle classes in Indonesia, of course. And then when you look at the current situation, in terms of the generation mix, coal still represents 60% of that in Indonesia and dominates. Gas and oil combined is 28% and renewables just 12%. There's new regulation coming in, the MERW Regulation 4, which says that PLN has to prioritise purchases from renewable energy. And what does that mean? And then, of course, we got lower prices. So we're in an environment now, we saw that, where there's going to be a decrease from Mr. Sampe's presentation, demand projected to fall across the board, and supply as well not falling by as much. So you have got this imbalance in the markets as well. So I think that's going to bring more countries into the mix, more competition, but also going to bring in smaller scale LNG buyers, which of course is a good thing for archipelago nature of Southeast Asia, where you can get smaller projects into some of these island structures. But I want to ask a question, just a general question to each of you. I mean, you mentioned Daniel Jawa 1. And of course, ADB had a role in that. And I was going to ask a question about the role in multilaterals in emerging markets projects to get these kick-started. We can talk about some of the structures later on. But what's the overall institutional appetite for financing LNG projects in the context of fast growth in renewables, a need to finance projects around the world? Perhaps, Daniel, if I go back to you, go back in reverse order. What is the appetite to actually kind of finance these projects? Because there's an awful lot of them need to be built if we're going to meet the targets.
Right. Yeah, and I think the appetite remains healthy. I mean, if you look at the spectrum of liquidity available for different asset classes, to me, it ranges from very illiquid for coal. You mentioned coal is still a big part of the energy matrix in Indonesia, but liquidity for that asset class has now dried up substantially to the tune that there's very little capital available. And at the other end of the spectrum, I think where liquidity is highest is renewables and gas to power. I think. To me, gas is a key, an integral part of the energy transition in Asia. As a substitute to coal. And I think I still see liquidity being high for the asset class, high among the commercial banks, relatively high among the multilaterals. Those are essential pieces of infrastructure, high among the export credit agencies. So generally, I think it is still part of the sweet spot in terms of availability of liquidity.
Thank you. And Dorian, if I could ask you the same question, your views on appetite for LNG projects, particularly in Indonesia.
I think appetite is still there, but not for too long. I think they will be starting a moment where the pressure from NGOs, Paris Climate Accords, etc., the agreements, will impact this form of investment. IFC has been the first. IFC is not investing in upstream anymore since October last year, so 2 years ago. We will reach that stage more or less in the coming years. So I remain a bit cautious, probably a bit more cautious than Daniel. I hope he's right, because we need that form of liquidity. But I suspect we will reach a point soon where, again, we will need to do without that form of support and liquidity brought by this form of multilaterals.
And I don't disagree with you, Dorian, but I think it bifurcates a little bit between the upstream segment. I think I agree. I think the upstream segment will be challenged. E&P, oil and gas production, that will be more challenging as the years go by. I think the onus is on us to really rebrand. Generale 1 is energy infrastructure. Right? It's a power asset. And I think that's where it bifurcates a little bit between the upstream, where I kind of agree with you. The outlook is not that rosy, but I think critical pieces of energy infrastructure, integrated power assets, I think that piece of the spectrum is more desirable.
Excellent. And Johan, the challenge here, of course, as Dorian and Daniel have said, really, is the fear of stranded assets, right? So no one's investing in coal really because of the fear that no one will be using coal in the near future. But kind of what do you think? Just going back to the general question of like institutional appetite for LNG in Indonesia in particular.
Yeah, I think it's still quite strong, actually. I mean, I think, LNG has a role to play in powering Indonesia and also Southeast Asia. While the sentiment to oil and gas more broadly is changing, I don't think it's going to change overnight. And I think, generally speaking, we're still seeing a lot of investment by both, Japanese trading houses, for example, just announced a project in Myanmar. So there is a big sort of thread going on where we're seeing sort of investment to power up developing Asia. And I think that's also where we see sort of multilaterals play a role, because when you're doing something new for the first time, having their presence to either sort of provide cornerstone liquidity to a transaction or to fund associated infrastructure, that's where they can play a kind of a leading role. I agree. Over time, I think the climate sort of debate will kind of carry over to oil and gas, but I'm probably more in sort of Daniel's camp in optimism. Yeah.
Okay, and just going back to Jawa 1, Daniel, thanks for that, Johan. The role of ADB and the multilateral in that project, you said it set a blueprint. Does that mean that the blueprint's been set, the model's been proven, and that institutional investors will now be able to go in and finance other projects without the multilaterals?
I think it depends on the markets. In Indonesia, probably, because we are doing this for other asset classes like hydro or solar. So I think that we could easily transition to the same thinking for those kind of projects. If we look more broadly across the region, there are a number of those projects in countries like Bangladesh or Vietnam or even Myanmar, for that matter, that are a lot more frontier in nature as markets. And I think that's where really the multilaterals have a role to play, to be enablers in some of those markets that are a bit less mature than Indonesia.
Yeah, because I'm sure Indonesia wouldn't want to be seen as a frontier market for too long, right? It's got a big role to play. Perhaps we can talk about some of the structures and of these projects. And if I can start with you again, Daniel, the structure of these projects. There's various ways of structuring them, from standalone to integrated. Perhaps you could maybe talk about a little bit about what happened at Jawa 1, but where you see as the future for project structuring, and all the way from the LNG through to the power plant, I think would be interesting, and other models that you've seen as well. And then I'll ask Dorian and Johan to comment on that. But let's talk about the structures of these projects, please.
Sure. So for LNG to power, essentially you have two assets. You have a regasification unit, whether it's floating or onshore, and you have a gas-fired power station. So that's what makes it different from other assets that we tend to finance, whether it's renewables or other assets. Here we're actually dealing with two assets that are intertwined. So there's two ways to do it, really. The easiest way is probably to do it on an integrated basis and to raise a single financing straddling both assets. But to do that, you need to have the exact same ownership. You need to have the exact same ownership across the value chain, and that's not always the case. So the other way to do it is to do two segregated transactions: a financing on the regas unit, a financing on the power station. What is helpful in that approach, though, is to have a general alignment of interest, and by that I mean some similarities between the equity investors on both assets, so that there's a common alignment. So it doesn't have to be the exact same overlap, but having generally the same parties on both assets is helpful. to make sure that there will be an alignment of interest. It is also helpful to have a relatively consistent a group of financiers on both assets, so that again, if problems were to arise on one leg of the chain, people keep in mind that this is a whole value chain and there's an alignment of interest. So Java 1, for example, we achieved that in the sense that we have the same key shareholders on both the regas unit and the power plant. There are some minorities on the regas unit, but generally we have a decent alignment of interest on the shareholding side. And then we have a pretty good alignment also across financiers, not exactly. The Asian Development Bank is only on the power plant, not on the regas unit, but most of the other lenders are on both sides. So when you achieve that alignment of interest, you can make it work, I think, with two segregated transactions. So those are the two basic models. I think beyond that, it also depends whether the sponsors are responsible for the LNG procurement or whether that's the responsibility of the off-taker. So that's also a variation on the theme. In Java 1, it's really the off-taker that's responsible for procuring the LNG. But I think we will also see models in Indonesia and elsewhere in the region where, some of the large international oil and gas companies that have an LNG portfolio will be investing in those kind of projects as a way to create demand and an outlet for the LNG. So those are, in my mind, the main types of structures that we will see.
Interesting. Perhaps I can switch to Johan and ask a bit just to kind of, add to that, and particularly around the different types of projects. I guess you've got projects at scale, projects which are important to national security, and then you've got more smaller opportunistic projects, including developing on some of the islands, replacing some of the diesel there in Indonesia. So, do you see different models for different types of projects as we go forwards?
Yeah, I think I do. I mean, particularly in the context of now it's harder and harder to get long-term offtake for LNG. And so for some of the smaller projects, doing it on an integrated basis with a power plant can make it can take some of that risk off. And I think for some of the smaller projects, the gearing ratios probably need to be reconsidered as well. If lenders are taking more merchant sort of price risk. I'd also look at, for the larger projects that are considered, I guess, strategic infrastructure, I mean, whether we can look at, tolling type models. So more and more we're seeing, particularly in frontier markets, whether, there's a delay in getting offtake or gas supply agreements in place, whether we can kind of sort of propose a tolling model where the proponent basically sort of pays the revenue stream for the LNG plant on an availability basis. And that kind of takes a lot of the time element away, because it means that you can project finance an asset a lot quicker, so long as whoever's sort of paying that availability payment is a sound credit. And often we see perhaps that can be a role of government as well, whether you have an SOE or some sort of government linked company being able to play that role. So I think, for markets which are having LNG as an important commodity for energy security, maybe that's another model that can be considered.
Okay. And Dorian, your views on this in terms of, the structure of projects, and I think, we can add in as well, the context of, the kind of delays in gas-fired power generation, slowing growth for the next couple of years, for LNG. Where do you see the structure of these projects?
So first, I want to repeat one last time what Daniel said 20 times, which is alignment of interest. Without alignment of interest in this project, things will derail at one moment or another, or you will never be able to close. It's project on project risk, and it's never ending. The second good thing is a favored approach could be an integrated project effectively, and possibly with a single financing, so that you may not cannibalize the liquidity, the banking liquidity on one leg compared to another as well. So this alignment of interest is key, and it's absolutely fundamental. So thank you, Daniel, for underlining this 25 times, I think. Delays are part of project financings. We're trying to mitigate them. For this specific project, it's very important to rely on your financial advisor when you are contemplating everything. It's fundamental. It takes time, but that's the starting point, I would say, for all these major financing, like the ones of Generale recently, is very critical and important, yes, in order to reach a successful outcome, not only on the financing side, but ultimately to reach.
So what should happen next then, Dorian? I mean, Refinitiv was reporting this week that there'd be no new FID this year for LNG export terminals, you know, quoting banking and energy analysts there. Now, you know, we're in danger with 2020 being written off. That we've got like 12 months of lost time. Is there a window of opportunity running out that we might never come back to? So what does a country like Indonesia need to do, given that it has got plans for tripling the size of the electricity market and, you know, the role that gas will play? Does it need to be like prioritization, for instance, in the country? I mean, what's your thoughts in terms of this lost window of opportunity?
First, last year was a heavy year in terms of final investment decision on the LNG space all over the world. And nothing will happen right now for a bit of time, I think. And there is still a bit of time before this market is becoming unbalanced. The project from last year will become on stream in 23, 24 and supply the market by then. But it's correct to assume that the project, which will be launched in the next 12 to 24 months, they need to happen. Otherwise, it's going to be critical starting 26 and 27. So the window is still there. Of course, right now it's difficult, but the fundamentals from a long-term perspective are around. If we look again at Asia, or say East Asia, the reliance on gas import will grow. In Singapore, China, and don't even talk about it, and Indonesia has changed its status from exporter to importer of LNG indeed. So there will be, there will be available supply in the market, and with this spectacular and incredible market, which is Indonesia in terms of energy needs and through gas. And I'm not very worried that even if it's not occurring in the next 12 months, there will be ample supply available for them, potentially through expansion locally, new project locally. Abadi has been ongoing for quite some time. It may happen, but again, it will take maybe 2-3 years. Before it starts being invested for real with project financing, but I'm not too worried otherwise.
Thanks. I mean, I'm going to ask Johan, you know, COVID, you know, is seen in some circles as like an accelerator of things like digitalization, but a break, of course, on a lot of other activities of governments are focused towards, you know, health and safety of populations and securing supply chains and businesses as well, you know, in terms of business continuity. Do you think that there is this lost window, and we've got COP26 coming up in a year's time as well, being hosted in the UK, following on from updating the Paris Climate Accords? Do you think that there is danger that in this window that the momentum towards LNG projects, gas power, will go away?
I think we've lost a bit of time, but I wouldn't say it's a lost window. I mean, I think we have to remember that you know, these projects. I mean, you're talking multi-billion-dollar projects with a 15-year view for sponsors. So yes, the COVID demand impacts are there, but I don't think you know, people are making investment decisions with the next 24 months or 36 months, you know, time horizon. I think what is required is trying to sort of get things ready, because I agree with Dorian. For the next little while, things are going to be quiet, but making sure that the projects that are economic, that are sort of progressing, those move ahead. And I think there is a little bit of competition from alternative fuels, whether it be renewables or hydrogen or different themes. So there's that technology window, which seems to be also catching up. But is it going to replace all of the LNG projects that are in the pipe? No. So I think over the next 24 months, the ruler will go through all of the projects in more detail, and the ones that come through are going to be the strong ones that go ahead.
Cool, excellent. I think we've covered that very well. There is a question that's come in, and if people do want to ask questions, please ask them through the Q&A or through the chat. But a question then from Toyoda-san. I was going to ask this, I can ask the question directly, but it's pointing towards the upstream. Can Indonesia contribute by expanding gas and LNG production? I mean, you mentioned that one, Dorian, about the upstream. Is that something, you've got any comments on upstream activity in Indonesia?
There are 2-3 big gas projects in Indonesia. The one led by Chevron. The rumor that Chevron wants to dispose of these assets. There is Abadi between banks and Shell. There's rumor that Shell wants to dispose of its interest. And there is the big one from Repsol. So you see, between these rumors of I keep it, I dispose it's too expensive, I need to lower my cost. The gas expansion right now in Indonesia, from my perspective, is not for tomorrow, with the exception of Repsol in corridor. Abadi was a floating LNG. Now it's a normal LNG plant. And between Shell potentially exiting and the other ongoing work, it will take also a bit of time. So locally, a boost in gas or LNG production will not happen tomorrow, definitely. But there are resources and reserves which are ready to be pumped.
This is a challenge. I don't know if anybody else wants to comment on that, but there is a trend for the majors to be exiting some of these projects in Indonesia, and whether that is going to affect the market. If anyone else wants to comment on that, jump in.
Yeah, absolutely. And it tells with what Dorian was saying. Clearly, the majors are rationalizing their portfolios, and they will be sellers of assets in markets that they no longer deem strategic, and that will happen.
You've gone on mute there, Daniel.
And in a number of markets in the region. So what does that mean? That means there will be other players really coming to the fore. Mid-tier companies will pick up some of those assets. So we'll see the likes of Medco Energy in Indonesia, for example, play a more substantial role. So there will be a bit of a reshuffling of the cards. And I do agree with Dorian that the prospects for substantial additional production domestically is probably limited. But to me, that is offset by one thing, that the affordability gap for LNG shrunk. We didn't see a lot of investment. Before Java 1, we have to really scratch our heads to think about the previous LNG regas or LNG to power project that happened in the region. There really hasn't been much because LNG was deemed to be unaffordable. That has changed. That has fundamentally changed. LNG is now plentiful. It's becoming affordable. And the comparison with coal has moved on from just economics to just also a matter of society. So I think that bodes very well for LNG as a transition fuel.
Yeah, I mean, that's a good introduction to the next session. I did just want to touch, though, on other countries in the region and their ambitions to be LNG hubs. Of course, you've got Singapore with its import terminal, Malaysia, Thailand, and of course, Indonesia. Four big countries there with hub ambitions. Does the fact that there's more gas in the region does that bode well for increasing, the viability of these projects wherever they happen to be? Johan, maybe you want to tackle that one.
Sure. So, I think my first comment is, regardless of where the hub is, if there's a hub, then it's a good thing for the region. Because I think as much as it is about having sort of physical, trading and storage, it's also having sort of transparent and liquid price discovery, which can kind of, add value to the overall, LNG market. I think in Indonesia, they're looking at sort of more sort of regional hubs to facilitate moving sort of LNG across the island. Will that kind of sort of be the dominant hub in Asia? I'm not sure. I think, and I think it really doesn't matter so much either. So I think as long as that there is a hub, then it kind of adds value to the overall market.
Excellent. Good. No, thank you for that. And let's move on to some of the risks now. And you mentioned now that Daniel, that there is obviously low pricing right now. But does that introduce a sourcing and pricing risk as more projects build out? At the moment we're in a stage where there's fewer buyers. European storage is full up. Warm winters, Northeast Asia, demand is down, prices are low. Is there a danger of price risk on some of these projects?
I think, what price volatility is your enemy. And price stability is your friend a little bit. So being in a lower price environment in itself is not that dramatic, because you're going to size and structure your financing around that price environment. The enemy is more extreme price volatility. So I think it gives more protection to the downside, the fact that the prices are currently low. The second thing I would say is, if we look at the LNG to power segment or side of the coin, ultimately those projects will continue to be largely contracted. The revenue stream on those projects will be electricity sales to utility over long-term contracts. And the fact that you have a relatively inexpensive feedstock is actually a positive thing. So I'm not too worried about that environment.
Okay, thanks very much. And Dorian, you might want to add to that, and maybe as well just bring in the point about the LNG at the moment. Looking at costs, for power is double that of coal. How does LNG compete with coal in Indonesia?
That's a good point. You get a few countries where, for example, the coal to gas swap, I would say, or switch, was before not something achievable. If you look at Korea, it was much cheaper to import coal than energy. With this change of environment and with clearly much lower energy prices in the market right now, however is its price, whether oil-linked or GKM or whatever Henry Hub, this has opened the door to more market, to more demand, and this has changed things. In some countries, I was mentioning Korea, you will see probably or inevitably more LNG imports compared to coal, not only because it's a political thing, if you want, or strategic or environmental thing, but it will happen. And the second thing in respect of coal is that there's no more liquidity associated with coal now. You don't finance any more coal project. A lot of the banks, if not all the banks, have retreated from that. So we reach a point in whatever country, will be Indonesia, will be some others, where in order to get your energy supply, you need to find what is available. And you need to find projects which can be financed, and it will not be coal. So the alternative, this transition, will remain gas.
Thank you. And
maybe
Daniel.
one more point, beyond the absence of capital, which is critical, as Dorian highlighted. But, I come from the U.S., and in the U.S. there is a saying, "Not in my backyard." I think that will happen now for coal. Society don't want those assets anymore. And it will transpire in Asia. I mean, there have been referendums in Thailand. People do not want new coal. There have been referendum in Taiwan. The people have spoken. They want coal to be phased out. So beyond just the cost of energy, the economics, the internal rate of return, the discounted cash flow, there's a fundamental shift in society. And people in this region are catching up to this, and they do no longer want those assets.
Yeah, we saw in Cambodia recently some pushback by the multinationals with the announcement of the 2 coal projects there. Very recently was reported. We're getting close to the top of the hour. Johan, do you want to talk about some of the other risks that are associated with these projects, particularly in the context of Indonesia, whether it's around performance, price, market demand, change of law? There's a whole bunch of risks, of course, and probably not much time to discuss them, but any that you would want to highlight?
Sure. I mean, I'm just coming back to the price risk. So, I mean, one of the things that I was going to add is that, yes, it's a good time to build LNG terminals now. I mean, price of LNG is low, but where there does have an impact is on the upstream investment. So again, what we're seeing is that on the upstream side, low oil and gas prices are having an impact on supply coming online. And so that's where there's that balancing out. Like, countries obviously want to import LNG as a good feedstock, but you also have to have the upstream. So coming back to the key risks, so obviously with prices being low, capital intensity becomes an important factor. Like, is your project economic? And also we've seen with a lot of the mega LNG projects, the capacity of having overruns. How is your financing structure? How are your sponsors able to deal with those overruns? I think from a political risk perspective, Indonesia is fairly well insulated. I mean, there's been a good history of investment in Indonesia, so that's not something that's too worrying. But I think it's really on the offtake side and securing long-term offtake, which continues to be a focus.
Excellent, thank you. We're getting to the top of the hour now, and so I think we will wrap up at the top of the hour. But just general thoughts from everybody. I mean, we mentioned it a little bit earlier, but what are we expecting in terms of building out the market? We're seeing would it be more activity, for instance, by the integrated companies? Are we going to see some of the Japanese trading houses? Is it the role of government to actually kind of kickstart some of these projects? Or is it a mixture of everybody? Who's going to be taking some of these positions in the downstream around these LNG to power projects? Daniel, perhaps I'll start with you.
Sure. So I think owners of LNG molecules will be very interested in creating new markets, in jump-starting demand. I think if we look at countries that are likely to import LNG by 2025 and are not doing so yet, most of them are in this part of the world, in Asia. So I think the owners of molecules that are looking for outlets, that are looking to create new demand, will be incentivized to invest in the downstream segment to make it happen and to create new areas of supply. Governments should help. I think in my introduction, I mentioned planning cycle. That's one of the headwinds. Land acquisition, permitting, government approvals, those things are notoriously difficult in countries like Indonesia or Vietnam. So having an energy policy that allows to fast track some of those things and deploy the infrastructure a little bit faster would be very helpful. So I think it's a combination of those players with energy portfolios, trading houses that want to add megawatts to their portfolio. That's their strategy. They want to grow their asset base, and then a conducive energy policy and regulatory environment that allows to fast track those investment decisions.
Great, thank you. And Dorian, just to comment on that in terms of who's going to be playing in this space.
Same. I think if you look at the former couple of years, the number of importing countries from LNG has grown up. You see, for example, take the example of Bangladesh, and Johan could talk a lot about it as well, such as Nalliah in terms of investment and financing, FSRUs, regasification, etc. It's a very good example of what's happening and what will happen. I think Sri Lanka is next on the list if we still talk about South Asia. For some others, probably a lot will need to be driven by the private sector with fiscal incentives or modest contribution from the governments themselves. Vietnam is a country which has strong ambitions in respect of gas imports. But I think the private sector, private investors will need to be the one doing the final push over there to see things materializing in a faster way.
Thanks. Yeah, that's good insight on Vietnam, where, strong ambitions as well. We're seeing developing renewable energy there, absolutely going gangbusters, leaving everyone else behind. And could be the same on LNG, perhaps. Johan, final comment from you in terms of who you see will be playing in this sector.
Yeah, I think it's a combination of a number of parties. I think particularly in the frontier markets, governments have a role to play in being able to, in each of these countries, whether it be Philippines, whether it be Bangladesh, Myanmar, there's always 3 or 4 terminals. But there needs to be one terminal that comes out of the race, and it's a clear winner and has some element of support or backing behind it. And in particularly in a low commodity price cycle, I think that will help. I think majors taking on making some decisions with long-term views will also help. And then I think, as Daniel was saying, the planning cycle is important. Being able to get these projects permitted and through, and having a clear sort of pathway on what you want your energy mix to be is also equally important.
Thank you very much. I think that was a really good discussion. We covered a lot of ground there, from the role of multilaterals to the appetite of institutions, and that seems to be very positive. There is a push towards gas as we decarbonize, and gas has got a very important role to play there. And of course, mixed in, of course, with the regional aspirations of other countries. Indonesia's not doing this alone. There are opportunities across the region as well, which Indonesia will need to kind of bear in mind, given that the capacity to actually kind of work on some of these projects and finance them. And then, of course, we spoke about some of the key risks and how gas to power can compete with coal, and the fact that we're seeing a kind of real downturn in coal investment right now. And then we spoke as well about who will be playing in this sector. So I think you're right. Anyone who's got molecules, whether they're producing them or trading them, will have an interest in taking some of these positions further downstream, both in the big projects and particularly in the smaller projects as well. So I think that was a really interesting session, and I'd like to thank the organisers for pulling it together. And I hope that everyone who joined will join me in thanking the 3 panelists who shared their views there with very good transparency. I was really interested in that discussion and your responses. So thank you to the panelists. I'll hand over back to you, Kevin, for final words. And with that from me.